Thank you all for coming. Today, as you know, I'm going to be talking about Islamic finance. Islamic finance is growing very fast. Since 1990, when Islamic finance started to come into its own, it's grown to from $150 billion in the year 2000 to $6.5 trillion today, and it's estimated to grow more at a rate of about 20% per annum over the next few years. But when you peel away the layers and you look down at the actual where has this development taken place, it becomes clear very quickly that most of the development has taken place at the upper echelons of the financial market. So, for example, in the capital market sphere, you have large-scale corporate sukuks, sovereign sukuks, and large-scale corporate and infrastructure borrowings. When you come down to the micro, small, and medium enterprise level, you realize that Islamic finance has barely touched the surface. So that's the basis of my presentation for today. I'm going to take you through the basics of Islamic finance, and then go on to discuss how Islamic finance can be used as a catalyst for development in our member countries, and more importantly, the opportunities that it presents to ADB to become more active in this department. So what is Islamic finance? The principal basis of Islamic finance is that money has no value, intrinsic value in Islamic finance. It is simply a medium of exchange. Therefore, in order for any project or financing to qualify for Islamic financing, there need to be an underlying business activity and underlying assets. So to put that briefly, there's no concept of time value for money in Islamic finance. Secondly, there's a list of prohibited activities. Some of the major activities that are prohibited are ones relating to gambling, casinos, armaments, and conventional financing, alcohol, and pornography. Apart from that, we cannot have any contracts or any activities which are speculative or uncertain in nature, so most of the futures contracts and options are prohibited on Islamic finance. Of course, the most important prohibition in Islamic finance is that we can't charge interest. And the basis for that is that since we can't use money to make more money, you have to have an economic activity. Now, that doesn't mean that Islamic banks are not profitable, because they are extremely profitable. But the projects and the financing needs to be structured in a way that allows for the development of profit rather than interest. So moving on, when we talk about the Islamic world, the thing that comes to mind almost immediately is the Middle East. But you might be surprised to know that actually the vast majority of Muslims live within ADB developing member countries. Almost 1 billion Muslims are currently residing in ADB developing member countries, and that's in contrast with only 300 odd million in the Middle East. So really, all the activity in Islamic finance should be happening on this side, but it's not, barring Malaysia. When we look at how Islamic finance is developing in our member countries, we realize that the situation is quite dire. We have only 29% of Muslims in ADB developing member countries have a bank account. That means 71% of people have no access to finance. When I say finance, it means they don't have a bank account, they don't have a means for saving, they don't have a means for borrowing even small amounts of money, they don't have the ability to take out insurance to safeguard against risks, they don't have the ability to plan for their future or the future of their families. That gives you a bit of the figures. 29% of Muslims with an account. Now, we've got these figures out here, and I wouldn't go as far as suggesting that the lack of Islamic finance in our DMCs is the only reason why the financial inclusion figures in Muslim countries are so low. There are obviously a lot of other reasons. For example, if someone is earning less than $2 a day, a bank account, savings, or insurance are unlikely to have an impact on their life. But we are missing a beat here because when you look at the demand for Islamic finance in all of these countries, it's extremely high. Even for us practitioners of Islamic finance, we find that the demand is so high that almost beggars belief. Now, if you take Pakistan for an example, 93% of non-banked people in Pakistan, i.e. the people who don't have any access to financial services, consider interest to be prohibited. And overall demand for Islamic finance in Pakistan is 73%. Now, the IFC has conducted many studies in many of the Islamic countries looking at the demand for Islamic finance. And what it found, particularly in Pakistan, is that 25% of small and medium enterprises will not take any form of non-Islamic financing. Now, what that means is that if you are doing a financial intermediary loan, or you are doing any form of microfinance, small or medium enterprise intervention in Pakistan, before you've even started, you've already cut out 25% of the people who you're trying to reach. And according to IFC, that sentiment is growing stronger every day and is likely to get stronger. Now, SMEs in Pakistan actually account for 30% of the actual GDP of Pakistan. And currently we have 67% of SMEs in Pakistan are unbanked, i.e. no access whatsoever to financial services. Now, when we look at other countries such as Kyrgyz Republic, so ADB is actually doing a TA in Kyrgyz Republic, and one of the questions I almost constantly get relating to this TA is, why are you doing an Islamic finance TA in Kyrgyz Republic? There's obviously no demand for Islamic finance over there. It's a former Soviet state, and there's not a high level of Islamic sentiment in these countries. But I was very interested to note that very recently, again, IFC did a study which said that 80% of SMEs in Kyrgyz Republic have a strong preference for Islamic finance and consider interest to be prohibited as a means of financing. So again, if you're doing something in Kyrgyz Republic, which is supposed to be impacting on these small and medium enterprises, if 80% of them don't want to take conventional finance, then really, how many people are you reaching? This story continues in all of the other Muslim majority countries. Afghanistan, 34% of people say that cite religious barriers for financing. 49% of Javanese consider interest to be prohibited under Islam. Now, the Philippines is the one exception where I wanted to also cover this. The majority of Muslims in the Philippines live in the autonomous region of Muslim Mindanao. There's around 4 million people there at the moment. And within that region, you have 21 bank branches and 33 ATM machines to service a population of 4 million people. The growth rate in the autonomous region of Muslim Mindanao is 1.2% compared with 8.2% for the rest of Mindanao. So it gives you an indication of the magnitude of the problem we're facing. And we need to be frank here. Destitution, poverty, it leads to all sorts of other problems. And one of the problems that obviously we're all seeing in the Muslim world is a problem of terrorism. And unless we are addressing these issues as an institution, as a primary development institution in Asia, with a mandate to reduce poverty. How are we reducing poverty? If 7 out of 10 Muslims within our region do not even have a bank account, no insurance, are absolutely totally at the whims of any sort of unscrupulous people who could influence them. Now, in the Philippines, the Banco Central is actually seen that Islamic finance is one of the primary ways in which to uplift the problems in Muslim Mindanao. ADB is working closely with Banco Central to help them develop the appropriate rules and regulations, and I'll come to that later on. Now, I've given you a lot of bad news, so I think it is just after lunch, so I want to give you a little good news. And what I wanted to just touch upon very briefly is Bangladesh. Now, Bangladesh is a country where we have seen a lot of development in Islamic finance, and that's primarily on the back of the private sector. 25% of the total banking market in Bangladesh is now Islamic banking. The single largest bank of any type in Bangladesh is the Islamic Bank. And not only is it the largest bank, it's also the most profitable bank. 23% of the SME market in Bangladesh is banking with Islamic banks at the moment. So we get an idea that where efforts are being made to increase financial inclusion, where efforts are being made to increase Islamic finance, there's a clear uptake in these DMCs. Now, when we look at the other countries like Pakistan and we look at former Soviet republics, at the moment we have less than a 0.1% penetration rate for Islamic finance. So that gives you where we just talked about Kyrgyz Republic, where we have 80% demand and we have a 0.1% uptake at the moment. So we need to be seen as an institution to be working. A lot of our competitors, I mean, they are co-financiers also, but they also are competitors, have realized the issues with the lack of Islamic financing and the sort of social and economic problems this brings, and are taking positive steps to rectify. IFC has done a lot of studies in the recent years. It's entered into advisory agreements with several institutions in several countries to see how they can increase Islamic finance in the SME sector in those countries. Where we are still lacking is ADB, and since this is our backyard, we need to be looking at taking a little more efforts to improve this. So what positive actions can we take, and what positive actions have been taken to date to increase the reach of Islamic finance in ADB projects? The first project I wanted to talk about was the new Credit Guarantee Institution project in Sri Lanka, which has a small Muslim minority. Here, the project involves giving of guarantees for SME businesses in Sri Lanka. Now, these SMEs will be pre-selected, and it took the team leader very little effort to bring Islamic finance into this sphere. All he did is he contacted a few Islamic banks. He explained the project to them, and he said, "Would you like to be a part of this project?" And they said yes. So all of a sudden, we've gone from a situation where any Muslim who will not take conventional financing has now been brought into the sphere of this project. And it took little effort on our part, but the developmental impact of this could potentially be huge. Agribusiness development assistance for small farmers. This was a project where ADB again tried to help out through Islamic finance loans, small farmers in Muslim Mindanao, the same region where we have 22 bank branches and 31 ATM machines. So once again, small project, JFPR finance, but the impact, again, could be quite huge. Financial Market Development and Inclusion Project. This is a project where we're not talking about financial inclusion, but the team leader for this project has been working on Islamic finance for quite a while now, And he is very careful that where he sees that there is a role for Islamic finance in the project, he brings that in. So here there will be policy actions relating to the development of Islamic finance in Indonesia, and it's hoped that these will have a trickle-down effect for small and medium enterprises also. PSOD. PSOD, again, team leaders within PSOD have taken a leading role. Now, this is totally outside of the small and medium enterprises sector. But once again, what we're noticing is that when team leaders are taking the initiative to go and speak to potential borrowers, would you like to take an Islamic financing loan? We're getting a good uptake for it. We expect within the next couple of years, we're going to have at least 2 to 3 projects using Islamic forms of financing within our private sector operations. And one other project which I obviously would like to mention is that within Pakistan, PRM has taken incredible efforts over the last 2-3 years to try and push through an Islamic finance, our first sovereign deal. If that goes through, that will obviously be our first deal in this sphere in ADB. Apart from this, we're working on KSTA, Islamic Finance for Inclusive Growth. This is in 5 countries in Central Asia. We're going to be helping these countries develop their legal and regulatory regimes, capacity development for the regulators, and general awareness building. Because the one issue that actually people don't realize is everyone thinks that all Muslims know about Islamic financing. But when I'm talking about small and medium enterprises within these countries, I'm talking about people who can't read, they can't write, and they're literally hand to mouth for every penny. So in that case, they also need to be made aware that, look, you don't need to carry on like this. There are Islamic products out there that could be useful, and you could do in accordance with your beliefs. And obviously, we're in a race against time with the World Bank to do the first Islamic finance TA for the Philippines, and that hopefully again, the Philippines has realized that there are considerable issues in the Muslim Mindanao region, and that Islamic finance needs to be very carefully and very quickly developed within the Philippines. So ADB is helping them. I don't have much time left, but the last thing I'd like to I'd like to leave everybody with is that there is an Islamic finance working group. We are here to help team leaders who want to get to those 7 out of 10 Muslims in our DMCs who don't have any access to finance, access finance. Please come to us if you have any questions, we can help. This is our duty now as the premier financial institution within Asia to see how we can develop this sector and make sure that we can help push these 682 million people out of poverty. Thank you.